our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Bullion Makes Correction Until Further Notice. Now, bullion prices moved lower in consecutive sessions since the 25th of September until today in the European session. We must note that a positive sentiment for the US Sino negotiations may have provided further strength to the greenback, which had a negative effect for gold prices. Gold is currently trading at prices last seen in the beginning of June 2019, and the general sell-off in the safe haven market is very evident currently. We make a start with the main driver as per the fundamentals for gold, which is the trade war negotiations. Most reports imply a positive sentiment, but some other reports also give the impression we are still where we started at. Yesterday, it was said that the Trump administration was contemplating removing Chinese listed companies from US stock markets. This could be seen as a rather exaggerated negative move from the US, and it also confirms that the tendencies to further control Chinese companies and their activities persist. In our view, if this was to take place, then it would again raise worries over global economic contraction, as the move could destabilize further business and trade flow. In that scenario, high financial risk would most certainly re-emerge and gold prices could pick up. From a bird's eye view, the situation does not seem to be ending anytime soon, but analysts argue that the chances of a compromise between the two nations may have increased and as time passes may increase even further. However, our opinion is that the US politicians unanimously are against China and its activities and may not be willing to back down. On the other hand, the Chinese may soften their approach as they look more interested in US farm products, which makes them look more willing to sign a deal. Furthermore, traders saw more confidence in the greenback yesterday as the currency dominated in all sessions and even continued its move higher in today's European session. The dollar index is now trading at levels seen previously back in 2017. This is proof the US dollar has been very strong in the previous months and could be eager to climb even higher. Another significant group of traders turned to equities yesterday, which may have also removed some demand for the precious metal. From a more technical perspective, we have also seen some action in the bond market as yields rose, which may have contributed to the recent drop in gold prices. In the days noted in our intro, which is since the 25th of September to the 30th, there was a significant upswing in US benchmark yields. Both the 10-year and 30-year benchmark had a small increase in their yields, and traditionally there has been a negative correlation between gold and bond yields. Gold traders are advised to keep caution while dealing with the precious metal in the current week, as important financial releases from the US are also imminent and could possibly act as a market mover. Today we expect the US ISM manufacturing PMI, and on the 3rd of October we anticipate the ISM non-manufacturing PMI, both released in the American session. However, the most impactful financial data for this week comes on Friday the 4th of October, where the US employment report for September will be released. And with the US dollar trading at multi-year highs currently, it would be interesting to see how far it could go. The forecast for the report implies more jobs could have been added compared to the previous month, and so gold traders could come against strong volatility upon release. Moving now to our technical analysis, this is gold 4-hour chart. Gold is currently trading just below our R1 1470 resistance barrier. We must note the latest selling of the precious metal may have been the steepest in 2019, as since our previous report 1 week ago, gold has lost over $60 in value. If this momentum is to continue, then we may see the precious metal heading to the S1 1450 support line and even breaching it. In any case, the next stops lower could be the S2 1437 support line or the S3 1427 support barrier. In the opposite direction, if gold is to correct higher, it would have to break above our R1 1470 resistance level and aim for the R2 1485 resistance barrier. A return to the R3 1500 resistance level is also possible, but with a strong bearish momentum formed in the latest sessions, this level is mentioned with some doubt. Also note our RSI indicator below our chart is running just below the 30 level, confirming more sellers are in the market currently. Now, if you've heard something in this report that you found useful, make sure you apply to your trading. That's the whole point. Thank you for your time. Enjoy solid trading, and we will see you soon.